Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom. I have not done a show in like 6 weeks. So I figured we'd do a little bit of catching up with Mom. Why haven't we done a show? Why do I have some blue tape stuck to my forehead? And then we will actually jump into interest rates because interest rates are improving. So there has been a lot of going on. Federal Reserve did come out 2-3 weeks ago and said that they were not reducing interest rates. They were leaving them flat. They were leaving them where they were. They didn't feel like there was enough data surrounding unemployment or, retail sales, inflation to warrant a rate cut. And we went from looking at no possibility of a rate cut to a 90% chance. And then the last that I heard was a 60% chance. So obviously it is something that is changing on a daily basis. But we now have a very good chance at a possible rate cut come September when the Fed does meet again. Now, the Federal Reserve Chairman, Jerome Powell, is set to speak. I believe it's tomorrow. And if it's not tomorrow, it's next week. So I need to go back and look at that again. But the next time that he does talk will give us a very good indicating factor as to whether or not they are going to consider that rate cut come September. So there have been a lot of things that have been playing in our favor as far as mortgage interest rates go. And it is looking like we have that possibility of 1, maybe even 2 or 3 rate cuts before the end of the year. So we're going to jump into that. I want to remind all of you guys that this is an interactive show. You are more than welcome to jump on, put your questions into the feed. Let me know that you are here. Say hi. Again, I haven't been on for about 5 or 6 weeks, so I'm going to jump into that for a minute and kind of let you guys know what's been going on. So about 6 weeks ago-ish, I actually had a couple of biopsies done and I had some skin cancer that they found that was on my back shoulder. So I went in and I had that removed, nice big stitches. PSA, wear your sunblock. I know that the skin cancer that I have at the moment is from, 30, 40 years ago when I was a kid. But it is really important to wear that sunblock. So I went in, got that done. That was healing up, wasn't feeling too good. So I figured, you know what, forget it. I'm going to take a week or 2 off and I'll do my show when I feel better. So then all of a sudden, my son, Manny, who has worked for me for many, many years, wanted to get into the police department. And so he, for months and months and months, had been going through background checks and finally got, his offer letter and was excited to start the police academy. Got there and within 2 days got COVID. So he comes home and he's got COVID. Sure enough, gives my husband COVID and the rest of the house COVID. So everybody was just absolutely sick. So we finally get through, we get through most of the sickness. As you know, one person gets it, then the next person gets it. So it continues to be this vicious cycle. And then I go in and I had another biopsy done on my head, actually over here. And that was skin cancer as well. So I went in and I got that removed. So once they actually did that surgery, which was last Tuesday, I thought, okay, I don't care. I'm going to wear my tape. I'm going to get on and I'm going to do a show, which was last Wednesday. But to be honest with you, the swelling and everything else that was going on, I just had this horrendous headache. There was absolutely no way that I could have sat here in front of you guys or given you anything that was useful information. So last week ended up being a dud as well. And so finally I said, it's been like 5-6 weeks. I haven't done a show. I need to get you guys caught up. I need to let you know what's going on with the market. So Band-Aid and all, tape and all, here we are, and we're going to do this show. I get my stitches out this coming Friday, so I'm very excited about that. So next week, obviously, I will be back again. Nobody should get sick. We've all been through it. We've all done it. So the cool thing is we all got sick in the summer. So hopefully that means we've got a nice and healthy winter ahead of us. And hopefully this is the last of the skin cancer that I need to get removed. So, knock on wood, right? All right. So I can see Joe jumps on and says, woohoo, love your show. You rock. So thank you, Joe, so much. And Rochelle got in and gave me a big hi. So Rochelle, thank you so much. And again, you guys, I want to remind you, this is an interactive show. So please feel free to put your questions into the comments. I am more than happy to read them out loud and answer them for you. So let's jump into what is going on with interest rates. So I kind of touched it really quick before I gave you guys the where is Debbie been spiel. And what we were talking about is, the employment has remained steady. And this is up until what I'm talking about right now is up until the Federal Reserve met at their last meeting, which was, I believe, 3 weeks ago. Could have been 2 weeks ago. Time frames are all completely blurred for me at the moment. But when they met last, at that point in time, all of the data that they had that they could review was showing unemployment was stable. It didn't look like anything, that the economy itself was not in any trouble. Now, we've talked numerous times on the show about how I kind of feel like we're all seeing that the economy is in trouble. We're all feeling that the economy is in trouble, but yet all of their reports and their data does not reflect that, which is what the Federal Reserve is using when they're making decisions. So as of their last meeting, unemployment was holding steady. Inflation was still very, very slowly but steadily rising. Concerns of Jerome Powell were that the tariffs, not sure exactly what those are going to do to inflation. Are they going to make things worse? So he felt that there was enough of strength and security behind data, and there was enough uncertainty around inflation that they could hold off and they could wait in cutting any kind of interest rates and leaving us as is. Now, since the time of that last Fed meeting, unemployment came out last week, a little bit weaker than expected, a little bit more unemployment than what they thought was going to happen. They came out today. There was Besant came out and talked, and the bond market, which is what mortgage-backed securities and mortgage interest rates are, very, very tied to. They really like it when he talks. And when he talks today, somebody flat out asked, what are you doing with the income being generated from the tariffs? And the response was directly, with no hesitation, it is being put towards the deficit. So the deficit that we have, currently, the federal deficit is huge, and it has continued to expand and enlarge. And so when he comes out and he says the income created by the tariffs is going to go directly into the deficits, that gave us a very favorable response today in our bonds, which is why we are seeing mortgage interest rates improve. So that is all really, really great. We want mortgage interest rates to improve. They need to improve. I have so many clients that are waiting for interest rates to drop because they really need to refinance. They really need to get some debts paid off. They really want to sell their home and they want to move. They want to downsize. They need to get something bigger. Their family's expanded, and everybody's really just been in this holding pattern. Nobody's doing anything because they're waiting for interest rates to come down. So that was a really good response that we got today to the to the answer of where is the income going from the tariffs, and it is going directly to deficit. And that actually sparked a very good response. I could see that Why Not got on. He said, we're just happy you and family are all better. So why not? Thank you so much. Do appreciate it. And you guys got to love this mess I got going on here with the hair. But I'm not pulling at using a brush. I've still got the stitches in. And every time I move, I smile. It pulls on those stitches. So hair is what you see is what you get, but I'll do it for you guys next week. So getting back to those interest rates, so I'm going to kind of read a couple of things to you guys. There's so much mixture going on, right? So my text message that went out to you said, we're seeing some interest rate improvement. We are. Interest rates have definitely done what they were supposed to do. Just like I've said for the last couple of years, they were going to very, very slowly come down. They have been very, very slowly coming down. They come down, they go up. They come down a little bit more the next time, and then they go back up. And we have this it's going like this, right? But the general trend is moving slowly down. So when we get wins like we got today, we get a little bit better, right? But are we going to keep getting those wins? Are we going to keep getting our interest rates going to keep going down? So this is what I want to talk about a little bit, because there is a lot that plays factors into where mortgage interest rates go. There are a lot of different things that are being looked at. So one of those things, so I'm just going to kind of read some things to you that are, I think, important for you to understand. So for example, we're experiencing several dynamics right now. Mixed treasury yields. Yields are generally lower this morning as investors continue to assess the potential path of the Federal Reserve rate cuts following yesterday's inflation data. So yesterday's inflation data was that the consumer price index actually decelerated. So it came in a little bit better than expected in the inflation. However, the core CPI accelerated. So core CPI got worse when they're looking at gas and utilities, when they're factoring that, home costs, where you live, when they're factoring that data into the inflation, it actually got a little bit worse. That is CPI. The actual consumer price index, so what we are paying for goods and services, actually decelerated. So, and it actually decelerated a little bit more than what was expected. So you've got this, it's good on one hand, not good on the other, right? It's going back and forth. So right now, what we got today was a nice little reprieve, little bit better interest rates, which is fabulous. But right now, the next forward looking will be when the Fed talks again, not does a meeting, but talks again, which will be, and I said earlier in the show, I thought it was tomorrow, but I believe it's actually next week. But I will tell you guys. So as soon as I know, like next week's show, when I do next week's show, obviously the Fed won't have met again, but we will have a conversation about what did he say, because what he says is going to be a leading indicator into whether or not the Fed will cut rates at the next meeting. So the market right now is considering the possibility of Fed rate cuts, with some believing cuts are needed to avoid recession. However, others are concerned about the impact of inflation on potential rate cuts. So there's this really fine line. If they cut interest rates, there's people that are concerned that if they don't, that we are going to see a recession here with the economy. And it is there, it's looming. Unemployment went up a little bit, price index came down, all of those factors that the Fed has been saying now for years that will move them to cut rates when they see those things start to happen. They may not do it, even though they should, with concern that the CPI was still higher than what it should have been. And if they cut interest rates, will that start inflation going the wrong direction again? So there's this very fine line of, can they cut? Should they cut? How long can they truly wait to cut before they absolutely tank our economy? So we are really in this very critical moment right now of what are they going to do? And that next meeting is in September. I'm going to look it up for you guys real quick right now. So it is September the 16th. So we've got basically 30 days. We've got a month before they actually make that next decision. And it's going to be really important to see what the Fed has to say next week. And then it's also going to be really important, very important for us to very, very closely watch the data that is coming out between now and then. So if they do a rate cut, are mortgage rates going to go down? That is going to be the question that I'm going to get over and over and over again. And the minute that they cut rates, if they cut them, I'm going to start getting phone calls from clients that would have maybe just recently closed a loan or, maybe over the last 6 months. So the one thing I do want to explain to you guys is that where the 10-year note is right now, the 10-year treasury, where it is at, which mortgage interest rates very closely follow. That 10-year treasury has been kind of sitting within a very small window of about 50 basis points up or down over the last 10 months. We have not seen huge changes, okay? So again, that kind of tells you about that very, very slow downward decline of interest rates. We're up, and then we come down, and then we're up, and then we come down. And so over the last 10 months, we've come down, but we've come down oh so very little when you actually look at how much have we actually come down in 10 months. And it's been a very, very slow, very, very guarded area of movement. So we need to try to break through some levels, and we can't break through levels until something changes. So right now, really watching that data. And when the Fed cuts rates, doesn't necessarily change interest rates on mortgages. So I know I've said that before, but I want to try to drive that home again. So if the Fed were to cut interest rates by a whole point, and they won't, okay? I'm telling you guys that right now, they won't. But just to make things really simple, let's pretend interest rates today, you get a rate quote, I tell you it's 6 3/4, and the Fed cuts the rate in September 13th, they say we're cutting it 1 point. Mortgage rates do not just all of the sudden drop to 5 3/4. They just don't. That is not how mortgage interest rates work. Now, you know what will change immediately? Home equity lines of credit. If you have a home equity line of credit that is variable and it is tied to the prime rate, which 99% of home equity lines of credit are, your interest rate 30 days later will be lower on that balance that you owe as long as you're in an adjustable. If you're in a fixed interest rate, your interest rate won't move. It's a fixed interest rate. But for those people that have an equity line of credit that is an adjustable rate, you will immediately see the interest rates drop. If you are shopping for a short-term loan, like a car loan, if you are looking at the interest rates on your credit cards, those interest rates will change immediately. They are directly connected to the Federal Reserve prime rate. Now, mortgage rates are not. Mortgage rates are tied to mortgage-backed securities, notes, bonds, and the 10-year treasuries. All of that market is what works our mortgage interest rates that we get from a rate sheet on a daily basis. It is not the Federal Reserve prime rate. Now, will that Federal Reserve prime rate eventually work their way into mortgage rates? Absolutely. I wouldn't be saying that we need rate cuts if they weren't going to help us. They will help us. They will work their way in, but it won't be an immediate change. You have to remember that the Federal Reserve prime rate, or the Fed funds rate, as they like to refer to it, is what the banks get to borrow money at. Then they in turn lend money to you. Now, it's not that simple. Wells Fargo Bank isn't directly getting money from the Federal Reserve, okay? So there's lots of different places that it's moving within. It takes time for itself to work its way into the mortgage rate environment. Will it work its way in? Yes. Is it going to be fast? Probably not. It's going to be something that is going to take time. Are we on an interest rate decline right now? Are we on the downward escalator for interest rates? Yes, we are. We are going in the right direction. Yes, I believe that we are going to continue going in the right direction. So the good news is we got a little bit better interest rates today, which was fabulous. Hopefully we'll hear the Fed talk next week to give us a little bit better indication of where things are going to go with their Fed meeting come September. Hopefully the rest of the data and the analysis and the reports that we see over the next 30 days continue to push us in a direction that would put the Fed in a position that they have to cut interest rates. They can't hold out any longer. If they don't cut rates, they're going to hurt the economy and they've got to make some changes. Hopefully some of that tariff income that we are starting to see generated now will start to show some deficits, some reduction in the actual budget deficit that we have for the government. So, we all just need to watch very closely right now because many of you, again, have been thinking, I really need to refinance. I really need to drop my interest rate. So let's talk about somebody that might really be in a position that would need to do that, okay? So if you have taken out a mortgage loan anywhere in the year of 2023, 2024, or 2025, there is a very good chance that you have a higher interest rate than where interest rates will eventually land, okay? I'm not telling you that come September, you're going to be able to refinance. It depends on obviously what kind of loan that you have, what interest rate that you got. Did you pay points and buy your rate down so you already started at a lower level than what somebody else might have? So we need to wait a little bit longer for you in order to get the the savings that it would give you to do some sort of a refinance. Correct. So what you should be doing right now, though, if you took out a loan in 2023, 2024, or 2025, you should be sending me an email. You should be sending me a message. You should be calling my office. We should be talking and we should be getting a game plan. I don't want you to do an application. I don't want anything from you. I want to have a conversation with you. How much do you owe? What is your house worth? What is your interest rate? What kind of loan do you have? What do you think that your credit score is? We're going to talk about all of that. Then we're going to decide what interest rate is a beneficial interest rate for you to do a refinance. We do not want to do a refinance if it's not going to benefit you. We don't want to do a refinance that is going to cost you money, not out of your pocket, but you will have closing costs. So if you have closing costs that are going to get added to a new mortgage balance when I write a new loan for you, does it make sense to do the refinance unless the savings are big enough to pay off those closing costs that you now had to finance, right? We want to make sure that it's beneficial. So what interest rate for your personal scenario do we need to be at for it to make sense for you? Then I put you on a list and I make sure that when I see interest rates come down to that level, that I'm reaching out to you to let you know it's time to get the application started. It's time to start exploring these numbers and to decide if we're going to move forward. Now, somebody else that might be wanting to do a refinance might have credit card debt that they've been wanting to pay off. And the best place to pay it off is with the equity out of their home. Maybe they took a personal loan because they didn't want to do a refinance on their house to pay off their debt. So they did a personal loan instead. I've seen personal loans of $40,000, $60,000, $100,000. Trust me, I've seen them. But they've taken a personal loan to pay off debt, but they've still got this big, huge payment. and they may want to refinance to consolidate. We also have clients that have taken home equity lines of credit to get the debt paid off or to do the home improvement on the house. And that home equity line has an interest rate of 9%, 9.5%. I've seen them as high as 13 and 14% on the home equity lines. So if you've taken a home equity line of credit because refinancing your house didn't make sense, you are a perfect candidate to be getting yourself ready and exploring and understanding where do interest rates need to be for it to be beneficial for me to do a refinance to consolidate my first and my equity line or my equity loan. So your first and your second mortgage, you got 2 mortgages on your house. What interest rate, where do interest rates need to be for it to be a benefit for you to combine the two together? So there are a lot of people out there right now that could use a refinance, need to do a refinance for one reason or another, but the market just hasn't allowed it. You guys, it's coming. It is so close. I can't even tell you. And it is really, really important for you to understand what number that you need to be at. What interest rate does it need to be at for it to make sense? So let's do that conversation up front. Let's talk, me and you, simple conversation. Let's talk about what you have, what your goal is, what interest rate that you need to be at. Let's get you on a list so that you don't miss out. And when the rates get there, we're going to reach out and we're going to let you know. So I hope that helps. I hope I gave you guys a good understanding of what's going on with the market. Definitely, I think that we are just literally around the corner, like 30 days around the corner from starting to see things, truly start to improve in our favor. Why not did ask if you're looking to first time buy in the next few months, how will the rate drops affect us? So that's a great question. When interest rates come down, obviously for the same loan amount at a lower interest rate, your monthly payment will be lower. So that means that we could get you qualified for a higher sales price when interest rates are lower than what we could qualify you at today. Or, like so many, they've been pre-approved, they totally qualify to buy a house, but they are uncomfortable with where the monthly payment will be for the price of the home that they want to buy. So what is going to happen? Interest rates are going to come down. So let's just throw an example out there, okay? And I'm going to talk on an average sales price of $750,000, because I can tell you this across the nation, which I'm doing this show on YouTube, Facebook, social media channels, right? Across the nation, $750,000 is probably a really high number for very many states. However, the majority of you guys listen to me in California because that is where I am from, right? And that is where I have done the majority of my business for many, many years. Now, am I licensed in other states? Absolutely. I got 14 of them. And I forgot to tell you guys, I am now licensed in Hawaii. So we added that. We just added that state recently. So, but let's talk, in California, $750,000, it is very hard to find a single family home in California anywhere for $750,000 or less. Okay. So let's talk 750,000. So let's say that is your number, and you are uncomfortable with where the monthly payment is going to be for you for that purchase, because I quoted you an interest rate of 7% or 7.25%, right? Because that's kind of 7%, 6.875, 7.25%. I mean, those have kind of been the average interest rates for months, 10 months, I told you guys earlier in the show. So if interest rates come down to 6.25%, that $750,000 monthly payment gets more affordable. So what does that do? That makes it more affordable for more people. More people get excited. More people get back in the market. More people get out there and start looking at homes, and more people start jumping into escrow. So interest rates are going to make things more affordable. But on the same token, interest rates making things more affordable can absolutely have a negative backwards effect, and it can make home prices go up. That is exactly what we saw during COVID when they dropped interest rates super low. housing prices went through the roof and super, super fast. So that when the Fed says we're trying to balance, we can't let the economy go bad, but at the same time, we can't bring interest rates down prematurely because it could spark inflation to go the wrong way. So if interest rates come down and it makes things more affordable and it gets more people excited to start buying homes, then we're going to start to get a little bit more bidding. We're going to start to get a little bit more war, a little bit more people on the street, more homes going into escrow, which could easily start to drive home prices up. So the question is, do you tank the economy, or, do you drive home prices up and you drive inflation up, right? So it's it is really a balancing act, and it is something that the normal person can't make those decisions. And I do truly believe that that they are trying to make the best decisions to try to help us as they can. But at the same time, it's time now, right? Everybody's had it with interest rates. Everybody's had it with the high payments. There are a lot of people that do need help, and also, a lot of times they will drop interest rates because it will have the effect that I am telling you. So it will get more people engaged. It will get more people on the street. It will get more people buying homes. And what does that do? It stimulates the economy. So if the economy starts to fall and then they cut interest rates to try to re-stimulate the economy, that's what they do. So when we see recessions, what happens? If you guys were around, which I was selling homes, doing mortgages, back during our Great Recession, in 07, 08, 09, watching everything melt down and then turn back around, what did they do? They dropped interest rates. Dropping interest rates helped get more people out there, and, things started to boost the economy. So there's a very fine line, but that is something that I think will happen when they do cut those rates. Things are going to be more affordable. We are going to see more people jump into action and start making some moves. So again, you don't just have first-time buyers that have decided to put it on hold because they don't want to take higher interest rate or they don't like the payment that's being quoted, but you have people that need to sell their home because they need to downsize. You have people that need to sell their home because they need to upsize. Their family size grew. You've got many things that people have been waiting to do for all these years. So I do think we're going to see a lot of stimulation in that housing market when those interest rates do come down. And I do think that we will see home values go up. But I don't know if we're going to see the crazy changes that we saw in COVID. So now I'm getting into right now with you guys my opinion. Okay, so everything I've told you up until now is how the world works. I'm going to kind of give you guys my opinion. So right now, and I don't know if you've been somebody that's been looking at buying a home and you've been watching home values and you've been following homes for sale and what's listed and what's available. We are starting to see, not in all areas, not in every state, not in every community, but across the nation, on average, we are starting to see quite a few price reductions. We are starting to see home values starting to slip slightly, which is good. They needed to. Home values have been too high. They needed to come down a little bit. But on top of that, interest rates need to come down, right? Because you can't have high prices and you can't have high interest rates at the same time. But buyers really got to the point where they're like, okay, enough is enough. Like, home values are way too high and interest rates are way too high. We're not doing it. So in a lot of communities, a lot of states across the country, we're seeing home values starting to come down. We're seeing values that have slipped about 5%, maybe some areas as much as 10%, other areas 2%, other areas nothing. I mean, if you look around LA County, Orange County in California, you're not really seeing home values really come down all that much. You're seeing homes sit on the market a little bit longer. Maybe it takes a little bit longer to get a buyer into the property. Sellers are negotiating a little bit more with buyers, giving them some more as far as incentives for closing costs and things. But we're not seeing massive, price declines. We're not seeing huge, price reductions. We are in other areas of the country. So I think that at the point that they do drop these interest rates and we start to see the housing market start to get stimulated again, I do think that we're going to see home values stabilize. So instead of, and this is where they've got that fine line of, do they allow us to go into a recession or do they cut interest rates, right? So I think that if they keep us on the path that we are in today, and again, this is my opinion, Debbie Marcoux, the mortgage mom. I am not telling you that this is fact. I am not telling you that I am an expert. I am giving you my opinion, being in this business for 30 plus years. I started immediately out of high school in 1995, and this is all I have done my entire life. So I can tell you from being through the ups and downs and many different economies and climates, what I see is going to happen, my opinion, is that if they do nothing, we are going to continue to see home values slide, and eventually even markets today that aren't feeling those repercussions are going to start to feel them, and we are going to see home values drop. If they cut rates, which they're going to have to eventually, so what I should say is when they cut rates, what is going to happen is it's going to stabilize. So homes that started down the slippery slope are going to stop slipping. They're going to stop sliding. They are going to stabilize. Then as the economy starts to improve, which again does not happen overnight, it's something that takes time. But as the economy improves and things start to move and we've got more and more and more transactions in the real estate world, then we'll start to see appreciation happen again. How long will that take? I couldn't tell you. It depends on how far do they drop the rates? How far do they cut them? How many cuts do they do? And then how quickly does that get people re-engaged? So there is nobody that can tell you exactly what is going to happen, when it is going to happen, how much of a decline is going to happen, how much of a gain is going to happen. Nobody can give you those things. And when you see them, I love the doomsday YouTube videos that I see all of the time. Housing prices are crashing. That's it. It's over. It's not over. No, we are starting to see things starting to sit on market longer. We are starting to see sellers understanding that if they don't come down to a decent price on their home, they're not going to sell and they're going to sit on the market forever. Nobody is going to pay you more money than what your neighbor's house sold for 2 months ago. So right now we're starting to see declines where the sellers are reducing the price that they listed at, coming down to a level that is, closer to what it should be. And when they are pricing the home correctly, it is selling. So, it's all speculation. You guys get to take the information that I gave you today and, use your judgment and you decide what you think is going to happen. Do I think that we are on the slow decline interest rate scale? Yes, I do. I think we are on the downward escalator. I think it is going to continue to move very slowly. But I do think that sitting here next year in August of 2026, I think that we are going to have lower interest rates than what we have today, which I think will be great. If they cut the rates like they should, I think that we're going to see more transactions happening this time next year in real estate. I think we're going to see more people being able to do the things that they've been on hold and they've been waiting to do for all these years now. So with that, I'm going to leave you guys with a positive show. It was a great day today. Loved what we heard from Scott Bessent. Loved that we are going to take that tariff money and start putting it towards that deficit. Love that our price index, retail sales pricing index, inflation is coming down. Not super crazy about the fact that our, housing is up. We don't want that inflation to continue. Unemployment is showing a little bit worse, a little bit higher unemployment numbers. So we are seeing the factors that the Fed wants for rate cuts to come. So with that, I'm going to say, let's all pray it happens next Wednesday right here at 1 p.m. I will give you guys what did the Fed say? What are we hearing this week? How are things looking? I'm going to give you guys an update on the market too, interest rate wise. So I'll give you guys where are interest rates for an FHA, a VA, a conventional. We'll kind of talk about that a little bit too, what goes into that. But just to kind of keep you guys abreast of where are interest rates, today. So we'll do that next Wednesday as well. And if there is anything else that you guys want, you need to know, you have a question about, you guys can always call. So if you bought a home in 23, 24, 25, took out a home equity line, 23, 24, 25, have debt or a personal loan that you'd like to get paid off, please reach out to me, guys. Please reach out to me. You can text me at my 844 number. So 844-935-3634. Text me. You guys can call me at that number. You can send me an email to Debbie@mortgagemomradio.com. You can go to my website, mortgagemomradio.com. You can click on the contact us and it will send me an email and I will reply. But get in touch with me. Let's talk. I don't charge you anything. I don't bite. I promise. You guys have all been watching me for years. I am just going to run the numbers. The calculators don't lie. And I'm going to tell you what that interest rate is that you personally need to see savings for it to make sense to do a refinance as far as cost. And we're going to get you on that wait list of contact me when we get there. I can see Josie jumped on real quick. She says, Debbie, so happy to see you back. I love and appreciate your educational show. Josie, thank you so much. I really do appreciate that. And I am so happy to be back, you guys. Like last week, I wanted to do it and just could not. Like this thing, I'm not even kidding, was like this thick. It was so thick. And I had this headache that felt like a concussion. It was just, I couldn't even think straight. Then obviously the week before, my husband had COVID, though he was COVID positive for 10 straight days. And then we all know, even once you test negative, that you still feel like absolute crap. So he felt horrible. My son was sick then for the week before my husband got it. Then me and the little guy both got sick. It wasn't COVID. We didn't test positive, but we were sick as dogs. So we've had a really rough 6 weeks, the Marcoux house, but I'm back. I'm good. We're starting the show off today with some great news. Everything's looking good. Everything's looking positive. Interest rates are going to come down. And if you haven't bought a home and you need to get pre-approved and you want to talk about a game plan towards purchasing a home, I'm telling you guys, and I've been saying it for 2 years, it was a good time to buy because there were less people in the market. There was less competition. You were able to negotiate with that seller to get closing costs paid on a lot of the transactions. You were able to negotiate with the seller to get them to come down a little bit on that home price. When these rates turn and there's more people out there that are looking at homes and purchasing homes, and there's just in general more transactions, there isn't going to be as much movement. The sellers are not going to have to give as much. So if you've been wanting to buy a home, stop waiting. This is the show that I'm literally throwing up the red flag, and I am telling you, stop waiting and get yourself pre-approved. Start the conversation, at least get the game plan and know what you need to be able to exercise and get it done. So Armando says, yikes, wishing you and your family positive vibes. So thank you, Armando. Jane says, thank you. Appreciate your knowledge and explaining things. Jane, thank you. Actually, Jane just bought her first house. So excited for her and so proud of her. It was something that, again, game plan. We made one. We figured it out. And she executed and got it done. So proud of you, Jane. And then Josie says, to hear that you and your family had gone through quite a bit lately, but to see that you keep the positive attitude is inspiring. Blessings. So Josie, thank you again. So you guys have a fabulous one. I'm going to stop the show now. It's been 45 minutes. I'm not going to keep you guys any longer, but it's good news. You guys need to reach out to me. That's where I'm leaving you. Go to the website, hit the contact us, send me a text message, do whatever you guys got to do to get in touch, but let's talk. And remember, if you want to know when I go live, you've got to text the word live, L-I-V-E, to my office number. So text live to 844-935-3634. 844-844-3434. That's 844 We Lend for You, WELEND, and the number 4. I hope you guys have a good one. Love you all, and we'll talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.